Ladies and gentlemen, good day and welcome to CG Power and Industrial Solutions Limited Q2 FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Renu Baid. Thank you and over to you, ma'am.
Yeah, thank you. A very good afternoon to everybody in the call. On behalf of IIFL Securities, I would like to welcome everyone for the 2Q FY24 earnings call of CG Power and Industrial Solutions Limited. From the management, we have with us today Mr. N. Srinivasan, Managing Director, Mr. Sushil Todi, Chief Financial Officer, Mr. Ramesh Kumar, President, Industrial Division, Mr. Mukul Srivastava, President, Switchgear Division, Mr. Ajay Jain, Vice President, Transformer Division, and Mr. Chidambaram Balakrishnan, Vice President, Railway Division. So all the business heads are here with us along with the senior management team. Without taking much time, I would now like to hand over the call to Mr. Srinivasan for his opening comments, after which we can open the session for Q&A. Thank you and over to you, sir.
Yeah. So thank you, Renu. Good afternoon, ladies and gentlemen. Let me first extend a warm welcome to you all for the Q2 FY24 annual earnings call. I am Natarajan Srinivasan, Managing Director of the company. My colleagues Ramesh Kumar, Mukul Srivastava, Chidambaram Balakrishnan, Sushil Todi, they are all with me in person or over the call. They have already been introduced by Renu Baid. I will straight away move to company performance. Q2 FY 2023-24 performance. Sales grew by year-on-year by 20% and profit before tax grew by 24%. Both the sales of 1,900 crores and profit before tax of 293 crores achieved during Q2 of FY24 is the highest ever for Q2 in recent times. Order book as on hand as of 30th September 2023 aggregate to 5,229 crores. Standalone financial results. Aggregate sales for the quarter were higher at 1,900 crores, recording a growth of 20% year-on-year and higher by 8% quarter-on-quarter. Profit before tax before exceptional items was at 293 crores, 15.4% of sales in Q2 of FY24 as against 237 crores, 14.9% of sales in Q2 of FY23 and rupees 256 crores, 14.5% of sales in Q1 of FY24. Margins were higher year-on-year on account of execution of export orders with better margins and lower finance costs. Our annualized ROCE for Q2 FY24 was at 44%. Free cash flow generated during the quarter was 319 crores. Order intake for Q2 FY24 was 2,232 crores. There is 22% growth year-on-year, and unexecuted order book as on 30th September 2023 was at 5,229 crores, a growth of 44% year-on-year. Segment-wise performance, industrial systems. Aggregate sales for the quarter were higher at 1,283 crores, recording a profit of 17%, recording a growth of 17% year-on-year and 2% quarter-on-quarter. Profit before interest and tax was at 207 crores, 16.1% of sales in Q2 of FY24 as against 195 crores, 17.8% of sales in Q2 of FY23 and rupees 197 crores, 15.7% of sales in Q1 of FY24. Margins are aligned with Q1 of FY24 margins. Order intake for quarter 2 FY24 was at 1,113 crores, a 4% growth year-on-year, and unexecuted order book as on 30th September was at rupees 1,866 crores. Power systems. Aggregate sales for the quarter were higher at 619 crores, recording a growth of 25% year-on-year and 21% quarter-on-quarter. PBIT was at 103 crores, 16.6% of sales in Q2 of FY24 as against 55 crores, 11.2% of sales in Q2 of FY23 and 63 crores, 12.3% of sales in Q1 of FY24. Margins were significantly higher year-on-year on account of execution of export orders with better margins, improved pricing due to demand environment and better operating leverage. Order intake for Q2 of FY24 was 1,118 crores, 47% growth year-on-year and unexecuted order book as of 30th September 2023 was rupees 3,363 crores. Financial results consolidated. Consolidated results include performance of operating subsidiaries in Sweden, Germany, and Netherlands, CG Adhesive Products Limited, and other non-operating and holding subsidiaries. Company has received the proceeds against sale of subsidiary QEA in USA this quarter. Aggregate sales for the quarter were higher at 2,002 crores, recording a growth of 20% year-on-year and 7% quarter-on-quarter. Profit before tax was at 303 crores, 15.1% of sales in Q2 of FY24, as against 237 crores, 14.1% of sales in Q2 of FY23, and 263 crores, 14% of sales in Q1 of FY24. Unexecuted order book of drives and automation Europe as of 30th 2023 was rupees 121 crores. Some key events. The Board of Directors today approved a proposal to expand the manufacturing capacity of switch gears at its plant in Nashik at 155 crores. Power transformers Bhopal at 31 crores for addition of 10,000 MVA capacity, and high tension motors in Bhopal 35 crores. In August 2023, the company JC Flower Asset Reconstruction Company, to which S Bank has assigned its trust to loans, have entered into a settlement agreement for the pending litigation on the company making a payment of 42 crores. JC FARC will unconditionally withdraw all the cases pending and initiated, and the company will be fully discharged from all the obligations, if any. Unaudited financial results with detailed notes are available as part of stock exchange filing the company's website. Between myself and my colleagues, we'll be happy to answer any questions. Thank you.
Yeah, we can move to the Q&A session now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question will be from the line of Ankur Sharma from HDFC Life. Please go ahead.
Yeah, hi sir, good afternoon. Thanks for your time as always, and great numbers this quarter as well. So first question was on the industrial systems business. While the top line part of EBIT margins of course are very good, just on the order inflows where we see a 4% growth for the quarter. So if you could just help us understand, where is this slowdown in orders coming from? Is it because of channel destocking? Is it because of some rail orders getting deferred? Or is there a slowdown in some other sector? Just trying to understand this slowdown in orders this quarter on the industrial side.
I think you answered the question yourself. So in this year, motors actually a large part of the sales take place through channel partners. Mm-hmm. So a large part of, therefore, the channel partners, depending upon the external environment, they decide to go slow or go fast or aggressive on the stocking. Currently, because of the difficult environment both globally and also in India, given the elections, etc., they would like to be a little cautious. While we are not seeing any slowdown or big thing in the underlying demand, but channel partners actually have been very conservative in making the orders and stocking. I think this will continue for some more time. Yes.
Okay. And anything to talk about on the rail side as well? I mean, is there any slowdown in terms of ordering from the rail side, from ICF or any other thing you want to flag out?
They have a system of tenders after which, the time to time they release tenders. Only the large orders like further Vande Bharat trains, etc., that I think that we don't know. Only as and when it is announced, probably there, whether it will come now or after the elections, etc., are not very clear. But normal procurement is going on as per schedule. Okay.
So the regular ones are still very much on. Okay. And lastly, sir, on the T&D side, the power T&D side, clearly order inflows have been very, very strong. So have been margins. So if you could just help us understand, where are these orders coming from? Because clearly Power Grid has been struggling for some time. So is it more state orders? Is it more private sector driven orders? Because even TBCB orders haven't really been a lot, right? So where are these orders coming from? If you could help us.
We have been generally have a preference to accept orders from EPC contractors, then private parties, and then some select utilities. I think the orders are from everyone are there.
I understand. Okay. All right, sir. Great. Thanks for time. All the best.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good afternoon, sir, and congratulations on a very, very good quarter. So my first question is on the capex which you announced on the switchgear. Is it primarily meant for transmission? Is it my understanding correct?
Mukul, can you answer this?
Yes, sir. Actually, our expansion projects for switchgear is in all segments, both for transmission as well as distribution.
Okay, understood. So my second question is on the of course the order intake for industrial has been low. Does it mean that the growth on industrial side will get impacted for next few quarters and you start pick up maybe post the election? Is that a fair understanding?
No, I think I answered this question earlier. Beyond this, I don't think your clarity is as much as our clarity.
Understood, sir. Is it possible to let us know, sir, the growth in low tension AC motors in H1 and large industrial motors separately?
We don't use this data separately.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Thanks a lot for taking this question, and congrats on a good set of numbers. My first question, once again, is in terms of the order inflow for the motors business. Yeah, we understand that domestic, there seems to be kind of a temporary pause in terms of growth. But in terms of exports of these motors, earlier in the call you used to mention that exports is another revenue which we are kind of exploring. But given the domestic demand, we are yet to cater to it. Now, can that be a big growth driver incrementally? So is that something that can happen over the next few months or few quarters till elections get over?
No, few quarters means I don't know. But otherwise, exports is something which you have to do a lot of spade work. The product has to suit local conditions. Locally, you must have some ability to service, you must appoint dealers. A lot of things are there. So therefore, over the few quarters it can happen. If you ask me immediately, I'm not sure.
Got it, sir. And if you can touch upon the other possible growth drivers like supply of motors to EVs and also the consumer durable piece, what is the kind of run rate that we are doing in terms of revenue? If you can share that will be great.
The supply of motors to EV will take some more time. I've been time around saying it is a long-term project. It will take some more time. I'm not seeing this happening at least in this financial year. Similarly, on the consumer goods, actually, the industry is actually a little bit of a slowdown. It's nothing great to talk about.
Okay. Would we have seen growth this quarter in the consumer durable piece, and what would have been the revenue run rate in that particular subsegment?
So revenue we cannot give separately. We are giving it as one segment only. So very, very marginal growth, I would say.
Understood, sir. Thanks a lot.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question. When we look at your revenue growth for the first half is still 16%. You articulated even in the last quarter that you are facing a little capacity challenge. Plus now the destocking which we are seeing across.
I believe we have lost the questioner. So I see that we have the next question from the line of Charanjit Singh. Please go ahead.
Hello, sir. Thanks for the opportunity and congratulations on good set of numbers. So my first question is regarding, the transformer market itself. If you can touch upon the overall, demand supply scenario, how you are seeing, from the overall demand perspective, this market growth in the next 1 to 2 years, and the supply, how much gap you think is there in the transformer demand supply?
So I may not be able to tell you how much gap will be there, because gap will manifest in longer delivery time. If you are not, you can say if I get a quote now today, I will say I am booked for next 10 months, so I will be able to give you after 11 months. Because of the huge investment that is happening in the power sector, demand for transformers has generally been buoyant. All the transformer manufacturers have got good orders. So for your answer to your question, next to 2 years, definitely they will have good orders.
Okay. And sir, in the realization front, are we able to take any kind of a price increase, or the price remains very competitive on the transformers market?
So generally, if you depends on customer to customer, it is all based on tender. Therefore, you can take a call whether you want to accept the order or not. So if it is utilities, maybe go strictly by tender. If it is EPC and private, there is some scope for negotiation. So I would say we have been getting our price that we have been getting actually are quite reasonable.
Okay. And the last question from my side on railways, especially if you can give the number for the first half, what was the revenue run rate, and any further specific applications for railways which you are working on, and maybe within the traction transformers, motors, and power electronics, how is that split currently for us for Indian Railways?
No, so the railways generally we don't give a separate turnover. We give along with industrial. But generally we are continuing to grow, continuing to perform as what we performed in the last year. There is no issue. So with respect to the other questions, unless there is specific, power electronics is a big thing. All of us are working on various initiatives. But nothing. If there is specific, I can answer. Otherwise, very difficult for me to give an answer.
Okay, got it, sir. That's all from my side. Thanks for taking my questions.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
So my question was just as in the last quarter you articulated that you are a little capacity constrained and not able to execute the full orders, and clearly reflecting in your first half revenue growth, which is 16% despite order growing much faster. Plus now the stocking thing which is happening, also partly because of slowdown, what we hear. How one should track this? This should be the revenue growth run rate one should maintain till the new capacity comes, at least for the next 1.5 years?
1.5 years, I won't be able to say, at least for the remaining part of the year. This is something which minimum we will be able to do.
Got it. And so just on the destocking part, I understand because generally it also driven sentiment by sentiment itself, though as you articulated that ground reality could be different. But generally, as far as inquiries are concerned, on the industrial side specifically, can you throw some light? Have the inquiries gone up in the last 6 months? What is happening at the ground level, sector-wise, which you normally talk about? Just, few lines on that.
Yeah. Actually, from the industry side, inquiry or the capex planning has been, it is not very much increased over last 6 months, but it is not gone down also.
Okay.
And the finalization and the procurement is getting delayed a bit.
Mm-hmm.
So that is how we are able to see some degrowth in that. This generally happens, just before the elections.
Yeah.
People will be very, very careful in expanding it.
Got it. Got it. Thank you very much. Thanks a lot. All the best.
Thank you. The next question is from the line of Rahul Gajare from Haitong Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, I'm coming back to the order intake number of 4% in this particular quarter. I want to know, if this has the lower copper prices and therefore did you have to take price cuts in the industrial business, which is getting reflected in the order intake? Is there a connection on that front?
Last time also I have told the same thing. See, when sudden rise and sudden drop, that definitely affects the sentiments of the people who are stocking it. So we don't know where the bottom is for the copper. So that is the way. Generally, market also expects that the price cut. So that is the reason we are also being very, very careful in booking the orders especially from channel partners. So they are also very careful in stocking the material because of the price fluctuation. So that is how this little bit of low order input, because we also don't want to take a long, because our deliveries are 4 to 6 weeks. So we don't want to take a long commitments of orders into our system.
But you're saying that you have not taken any price cut. That's how one can interpret this.
Yeah.
Okay. So now with respect to your export business, I know maybe a year and a half back you were talking about, it will take about 1.5 to 2 years, to set up branch network, service network, in overseas market. So I want to understand where are we on our export journey, given that we are ramping up capacity also. So both on transformer side and motor side, where are we?
It will take time. See, we are ramping up means we only announced. We have only started implementing. The capacity build-up will take 2 years' time. The transformer project will get completed in about 15 months from now, and even then after that, the domestic demand is so high, I don't know whether we will immediately start exporting transformers. Depends on how much order book we have. So it is a little bit of time away.
Okay. Sir, if I'm not mistaken, your transformer capacity was hovering around 55 to 60%. Is that right, or that has materially changed now? Utilization.
I don't have the number with me. I will have to check. See, I think, transformer, some amount of transformer capacity will have to be given for servicing some of the requests from the customers. So that will go some amount. Some amount will be used for production. It may be close to about 70 or 70 plus.
Okay, sir. Thank you very much and all the best.
Thank you. The next question is from the line of Subhadip Mitra from Nuvama Institutional Equities. Please go ahead.
Good afternoon, and thank you for the opportunity. Sir, I wanted to understand that given that you are seeing, capacities that are being added across, transformers as well as switchgears, with the expanded capacity that you now have across both power and industrial, what level of revenue are you looking to reach? I mean, how much of revenue can this expanded capacity support?
So I think, the transformer will give me about, when it is fully expanded and fully used, for capacity utilization, you have to assume at 90% or so. So the transformer will give me about 1,500 crores, and then the switchgear will give me about 600 crores.
Okay, understood. And on the motor side, your existing capacity would be able to support how much revenue?
No, existing capacity means, we manufacture, the different categories are there. We manufacture roughly about 1 lakh motors per month.
Right. So is there any ballpark number of revenue that one can look at from motors based on existing capacity before you need to go for capex?
We already announced the capex to double the capacity, no? Motor, we already announced the capacity to double the manufacturing capacity.
Correct. So I was just trying to get an inkling as to, on that double capacity, what is the max top line that one can look at, let's say, over the next 2 to 3 years?
No, it will take, as and when the project is completed, and assuming 85 to 90% capacity utilization, you can say about 2,800 to 3,000 crores volume growth will be there.
Understood. Thank you. And the next question is actually with regard to the power segment margins. I think we've seen some very robust margins in this particular quarter. Is there any one-off or any export-related order or anything of that sort, or this can be the sustainable margin going ahead?
Some export orders are that we have given in the comments also. Export orders definitely are there as a mix, product mix, where probably has contributed to this extra margin.
Understood. And do you see that, this quantum of exports is something that will sustain going ahead, or it will be sporadic?
Cannot say. It's not sustainable. I can't say every month, every quarter this will be there. I can't say that.
Perfect. Thank you. Lastly, would you be giving any guidance for how you see, let's say, top line growth and margins over the next, let's say, 1.5, 2 years, let's say over 24 and 25?
We don't give guidance, sir. We don't give guidance.
Understood. Thank you so much for answering my question.
Thank you. The next question is from the line of Ashish Golecha from Ajit Securities. Please go ahead.
Yeah. Hi, sir. Excellent set of numbers. Sir, my two questions were, first question was, as per the recent TV interview, there was a discussion that the company is in talks to acquire a listed or an unlisted firm in the transformer sector. So wanted to understand how close we are to that thing, and would that acquisition be EPS accretive from day one? Second, sir, with respect to railways, are we planning to build a consortium with any large partner if it is in line? And with respect to the cash on the balance sheet, as per the numbers declared, what do we plan to make use of it? I see 149.34 crores as on the half-yearly numbers. Thhank you so much, sir.
So I think on the questions on acquisition and then bidding for consortium, the answer is no. There are no such things that we can report on as of now. The third aspect is, cash is there, but likewise we have got expenditure also. We have to pay tax, we have to pay dividends, and we have to finance all the capex expenditure. So therefore the cash will be used for all this.
Okay. But the acquisition is still on, sir?
Huh?
The acquisition is still in process, or it will take some time?
So nothing is there. If there is anything that don't have anything that I can report.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Ms. Renu Baid from IIFL Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. My first question is to understand, while you have mentioned and articulated the power supply buoyancy in demand and supply constraints, so the kind of price equation which has now turned in favor of the suppliers, do we perceive that this situation should sustain for 2 to 4 quarters till companies or suppliers expand capacity? And as a result, can we expect margins in the power segment at the EBIT level could be closer to these mid-teens for a few more quarters?
So, Renu, I think you are very knowledgeable, but still you are asking this question. So I think we are working hard. That's all I can say. See, we have no, the price of copper moves, other CRGO steel, we have no control over all that. So with all that, whatever we are best possible, we are doing. So, but generally, I think whatever prices we are getting, the demand supply, whatever the equation currently is there, is likely to continue. Therefore, I feel at least for a few quarters, things should be okay.
Sure. And on a broad basis, given capacity expansions are underway, we are also upgrading our portfolio in new applications on the industrial segment. Structurally, do we perceive that our business can sustain these margins for a longer term perspective?
A very difficult question to answer. If longer term means how many years? Nobody has.
2 to 3 years, if not longer, then near to medium term.
You know the external geopolitical environment. 2 days back when I was listening to the TV, some analysts were saying that, our steel prices are going to go up. So like that, we have, in our industry, the material cost is quite large, a substantial portion of cost of manufacture. Nobody can predict the long term.
Got it. On power capacity addition, while the 10,000 MV expansion which you have announced today, this would be largely for the domestic market, and any plans to add new capacity or a new facility for export of transformers with your portfolio that we have, especially transformers?
So we have to digest this first. Totally from 17,000, now we are moving to 35,000. We have to implement this in full and get this commissioned and start manufacturing. Then only we will, anything extra can be thought through.
Sure. And lastly, one question for Ramesh sir. In terms of the industrial business, we did mention of a good traction in the HT motor business for us. So any updates in terms of how the market share gains have moved? This was one segment where market share for CG had compressed a bit in the last 18 months. So how is the trajectory there?
See, Q2 results have not been announced, but Q1 we have 300 BPS increase in market share for large industrial machine. That's as per EMA data.
Got it. Thanks much and all the best, sir. Thank you.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Go ahead.
Thank you, everyone, for the opportunity. My first question was more on the margins in the industrial systems segment. Given the recent weakness in incremental growth, is there a case for margins slipping below 15% in the segment, or can they hold steady at the numbers that are currently coming in?
It depends on the input costs. If the input costs go up, then margin will take hit. Otherwise, we can manage it.
Understood. The second question was on the new capacity expansions that are being talked about right now, which are primarily focused on the power systems division. I wanted to get a sense of that, as is going to be the case in industrial systems, whether it is going to be return accretive or hugely return accretive. Will these capacity expansions also be of a similar nature for power systems business?
I don't get your question. What do you say?
What I'm trying to ascertain is that at least our thought process is that in industrial systems, the capacity expansions announced will meaningfully improve the cost structure and the business returns for the entire industrial systems segment. The expansions that have been announced for power systems, are they also brownfield in nature, can meaningfully improve the cost structure / returns for the segment?
Yeah. If not, otherwise we will not take it up now. Board will not clear, investment committee will not clear. These projects are per se more than viable. They have a decent IRR plus payback. Otherwise, you will not touch it.
Understood. The last question was more on the exports portfolio, and it's a more forward-looking question. You expect exports to become a bigger number next 3 years. Let's say 3 years from now, in the mix of exports, what will be the largest component? Will it be motors, followed by power transformers, or can railways be a meaningful proportion as well inside?
So difficult to say because all of them have got potential. Transformer also has got good potential, and as you know, CG has been in the forefront for export of transformers. So supposing good orders come, and value will be higher. Motor, one order of transformer will be quite large. The motors will have to sell a lot of motors. So both, it is difficult to say.
Or put differently, at a global level, is your cost structure on a relative basis in motors much better than that in transformers, or is it, as in both parties can win really big over time, given the cost structure that you have globally?
I don't have the cost data to answer your question scientifically. I don't want to say what I feel, but I don't have the cost data. So the transformer, etc., is tender. Therefore, if my thing is accepted, then I think that is generally a and I don't quote a price which is not acceptable to me. Motors is different cup of tea. We'll have to produce and then go on stock and then sell. So and then depending upon what is the exchange rate, etc., we'll get the money. So I don't have. This is a very difficult answer.
Understood. So all the very best for business incrementally. Thank you. Those are my questions.
Thank you. The next question is from the line of Rajesh Vora from Jainmay Venture. Please go ahead.
Good afternoon, gentlemen, and congrats on good set of numbers. First question is on Is there a capacity constraint that could have led to any sacrifice in revenues in this first half or this quarter, second quarter?
What is the question?
Capacity constraints have led to any sacrifice?
No, nothing of the sort.
Okay. And for the first time, power system division EBIT margins have crossed 16% and higher than industrial system division margin. So could you explain the reason why industrial has seen a decline YOY? One quarter is of course not to really read too much into, but just to understand the dynamics. And can power system division sustain this level of 16% EBIT margin on a medium-term basis?
So I think we answered this question earlier. So power system consists of switchgear, transformers. There are a number of orders. Each order will be different. Each margin for each order will be different. Export will have a different model, different margin, and then the type of transformer. Each one will be a different. Therefore, we will not be able to clearly say. It's not like a one set pattern that will emerge all the time. This quarter, everything has been quite favorable. Therefore, the margins are higher. But while I cannot say that we will be able to maintain this, margins will be decent, I would say. It will not be very low, or we don't see a situation. This will be going by the general trend that is prevailing and our own order book, etc. I think margins will be decent.
So I think the congratulations to the whole team. I think in the last 2-3 years, tremendous turnaround in margins, and even at a company level now, PBT margins are 15%. In this quarter, which is record high, and we used to have EBITDA margin at that level, so it's a great work done. One last point on export side, what small exports are we doing that you mentioned in this press release? What are the products and?
So exports actually, transformers, switchgear, motors, all the three are exporting, also in a very small level. So the idea is to scale up maybe in about next year or year after. Gradually, we want to scale it up.
So what sort of, if you can give a little bit of idea about how are we, what is the sales model out there? Are we going to the distribution channel? Are we putting it in our own brand? How does it work?
The motor is through distribution channel. Mm-hmm. The others will be responding to inquiry. Transformer and switchgear will be responding to inquiry.
Okay, more like
global tenders.
Okay. Thank you. All the very best.
Thank you.
Thank you so much. As there are no further questions from the participants, I now hand the conference over to Ms. Renu Baid for closing comments.
Thank you, everyone. On behalf of IIFL Securities, I would like to thank the management for giving us the opportunity to host the call, and audience for being patient on this call. NS sir, any closing comments from your side?
No, nothing special actually. Thanks. I want to just thank everyone for the interest shown in the company. That's it.
Sure. Thank you, and we can close this call on this note.
Okay. Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.